In this video, I'll explain why popular YouTuber Kevin's optimistic forecasts for Tesla stock will come to pass, even though it seems that the stock's dismal 2022 performance has already refuted his projections. As you may remember, over the summer of last year, Tesla announced a 3-for-1 stock split in an attempt to make its years more accessible to investors, following weeks of headlines around the company's efforts to enhance its market value. If you recall from business reporting on EVS at the time, alarmists were trying to sound something like this. In light of the split, experts and investors set alarming price estimates for Tesla. A long time ago, Kevin was one of these analysts. We might obviously assume that Kevin's expectations have not come to pass. However, the professional YouTuber and serial investor from Tesla Bowl explained why the stock's forecasted performance following the split was supposed to be genuinely outstanding thus far. Although the iconic EV maker has had a disastrous few months and its shares are down 69% year over year, there is still reason to hope that Kevin's hopeful predictions regarding the Tesla stock split will come true first. Please hit the like button, subscribe, and turn on the alerts if you like this video so you can be updated on new developments. Back in the day, analysts such as myself responded to Tesla's announcement of a 3-for-1 stock split, which we all believe will restore the stock's market value. Kevin is hoping that following the split, the stock would perform better. Kevin, a passionate investor and financial expert from America, believes that Tesla's proposed 3-for-1 stock click might benefit both the firm and investors. This is because corporations typically outperform the S&P 500, an index that tracks 500 publicly traded companies following stock splits in the U.S. The split of Tesla's stock was a 3-for-1 split, meaning that you received 3 additional shares for each share you already owned. However, the split had no effect on the value of your stock portfolio. This is a typical reaction when the stock price of a corporation, the average investor can no longer afford to purchase a share of Tesla stock as a result of its surge. A share of Tesla stock was worth about $714 at the time of the split. With a price of about $238 on the split day, the stock became more accessible to investors as a result of the split. According to Tesla, there has been a lot of interest from private investors in purchasing the company's shares. Therefore, a stock split would have been the most effective strategy to draw in new investors. At the time, Kevin believed that the stock split was a smart idea since, unlike other tech firms, Tesla's earnings estimates are more realistic. This was shared by other Tesla bulls. As he stated during the discussion of the split, Kevin saw the opportunity to buy more Tesla shares because a rise in the share price would mean more money for the company's shareholders. This is where, despite what we have seen recently, Kevin's prophecy may begin to make sense. Additionally, during the cyber rodeo at the time of the split, Kevin explained why he believed that Tesla's market value would approach $10 trillion in the next 10 years in relation to robots. The firm to purchase and invest in is Tesla. Kevin thinks that within the next 2 years, Tesla will declare that 5 to 10 more gigafactories are going to be built, using the argument that other companies just replicate what they do. Tesla is focusing more on artificial intelligence and is making less emphasis on manufacturing automobiles. The company's new aspirations to enter the artificial intelligence area are impressive, to put it lightly. Kevin thinks there is opportunity for Tesla's supply network. The demand for Tesla's electric vehicles is steadily rising in China and other nations, so despite the difficulties the firm is now facing, these hurdles might only need to be temporary. According to Kevin, Tesla's robotic humanoid might be a game changer for the company since it addresses the main concerns surrounding its endeavor, namely, the possibility that people may eventually be replaced by robots. Tesla's Optimus will increase productivity and enable the pursuit of more lucrative commercial opportunities. I've heard that Kevin is confident about Tesla's future prospects and that the company's stock is performing well. Fortunately, a lot of stock analysts agree with him. Following the announcement of the June stock split, TNN Money reported that 12 out of 45 investment analysts it for the long term. I fail to see why the company's foundations are still flawless despite its recent performance. Demand exists, the business continues to meet it, and the public's perception of electronic vehicles continues to change. Are grateful that you saw it, and we hope to see you soon. Favor of them. For some time now, Tesla has been discussing their designs for robo-taxis and cybertrucks. Not only are the public's eyes focused on Tesla's more recent car models, but these advancements in the UV sector may also offer Tesla a competitive edge over its rivals. The business sold more than 167,572 Model 3s in 2022, ranking among the top manufacturers in terms of sales. Due to its rapid growth and several tactics to raise its market worth, Tesla could see a significant boost in its stock price in the future. The business has not been exempt from setting a lofty price target for Tesla stock may not be the best option given the market issues that have surfaced in recent months, as numerous factors have kept the stock from rising sharply. It's encouraging to learn that Kevin Tweaks concurs that the financial report indicates the stock market is expensive. Therefore, the estimate of $3,000 per share following display in 2024 might be a bit too high. Let us also examine the views of other analysts. According to Brian Johnson's analysis, a decrease in Shanghai output from 315,000 to 251,000 may have contributed to Tesla's first quarter production and profitability falling short of forecasts. Recently, the global British bank Barclays raised its target price for Tesla to $370 per share. For their individual stocks, RBC Capital and UBS have set target prices of $1,100. The two new gigafactories for Tesla are producing more, which is the cause of the large order backlog. Prices and procedures have gone up, which has helped Tesla's margins. Compared to other electric car manufacturers, the EV company has an advantage thanks to innovation and an enhanced supply network. The three primary justifications given by Patrick Kummer for Tesla's price target, music, were that software development and semiconductor battery development will spur growth and profitability. For the foreseeable future, American YouTuber Kevin is confident that Tesla will continuously beat its competitors. His most recent tweet indicates that he possesses over 50 Tesla shares. The performance of the company as a whole will matter most, even if Tesla's stock price increases following the split. The good news is that this is not the first time Tesla has split its stock. On August 31, 2020, the company announced a 5-for-1 split, which increased the price of the stock in a comparable range. Similarly, investors responded favorably to Amazon's recent 24-for-1 stock split. This does not guarantee that the price of Tesla stock will rise after the split, which it hasn't as of course. However, it might give us a sense of what might occur in 2 or 3 years. If you want to avoid losing all of your investments, it's a good idea to follow Kevin's advice and diversify your holdings across a number of markets. Although it's likely that the split influenced investors' decisions to buy Tesla shares, it's still uncertain if the stock price will increase or decrease over the course of the next 10 to 12 months. Do you see Tesla in the same positive light as Kevin, or do you see things slightly differently? Please remember to subscribe and hit the like button in addition to sharing your ideas in the comments section below.